Good afternoon. It's Tuesday, August 14th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals Studio. Today we're going to talk about the strength in the US dollar and how it affects the price of precious metals.
This is your Monex Metals Market Update with Mike Maroney.
If you look at the US dollar from the beginning of this year, at the beginning of this year, it took 143 US dollars to buy 100 British pounds. Today, it takes 126 US dollars to buy 100 British pounds, or basically the pound has gone from $1.43 to $1.26. That's a 17-cent drop in the last 8 months. The euro started the year at 124, and today it is trading at 113. That's an 11-cent drop in the value of the euro since the beginning of the year. And interestingly enough, if you look at other countries, and I'll give you an example of a key country as far as precious metals are concerned, at the beginning of the year, if you wanted to buy South African rand, for $1, you would get 11 South African rand. Right now, for $1, you get 14.5 South African rand. It really affects the price of precious metals because their break-evens and their cost is based on their local currency. And after a period of time, yes, their break-evens will go up because everything they buy with their currency, as their currency drops, will get more expensive, and their cost average as far as production will change. But in the short term, it affects the price of their key products, which just so happens to be the PGMs. So now, what's going to happen with the US dollar? The dollar started the year based on the Dixie at 88 and is currently trading at 96.50. Many people believe that the top of the range is up around 97, 97.5. And what we've seen is the price of gold drop from $13.70 all the way down to $1,200, and silver from $17.40 all the way down to $15. The key fact right now is once the momentum starts to wane as far as US dollars, bargain hunters will come out of the woodwork and start to buy precious metals. Now, where will that be? We'll have to see what happens. And it looks like we're getting at the upper end of the range as far as the dollar and the lower end of the range as far as gold is concerned. Key support in gold sits right at 1180 and then down around 1140. Key support in silver sits at 1478 and then down around 1435. And key support in the PGMs for platinum sits at about 790 and then around 755. And in palladium, it sits around 865 and then down around 815, 820. So, based on what's happening now, we have seen a tremendous rally in the US dollar. But the long-term implications of what's happening and how we're creating this positive movement obviously doesn't bode well long-term fundamentally, because our debt is going to continue to grow, and as the dollar strengthens, our economy will start to slow down. And if we start raising rates and continue to raise rates, that will again affect the economy in a negative fashion. Inevitably, the dollar will peak, precious metals will bottom, and if you want to buy low and sell high, you have to buy low. And right now, the metals look to be at the lower end of their range. Give us a call so we can explain what this means to you as far as opportunity in the precious metals market and find out if the metals make sense for your portfolio. Thank you.